Maarius, thanks very much for joining us on Power Lunch today. Earnings per share 9.81 cents versus 7.19 cents. Operating profit, it says here, 114.4 million. Special dividend of 30 cents. And production steady on gold, well up on antimony. Quite a satisfactory performance, I would say. Yeah,
Lindsay, it was particularly given some of the sort of trends that we experience in the industry with the sort of holidays during April, which impacts on our sort of ability to produce, somewhat similar to what we now have during our sort of January month, but overall very satisfactory. Could have been better, as you would see from some of the comments in terms of sort of safety-related stoppages impacting on our overall production, but satisfactory nonetheless.
Is it because the reason that you almost sort of stabilised where some of the bigger players haven't managed to achieve that, is that because you're a smaller player, not a bit part player of course, but a junior miner, and therefore you're more nimble and more able to contain the sort of pressures that the rest of the mining industry is suffering?
I would think there's a bit of that, but I also think that because you have got less operations to look after, you do pay a lot more attention to the operations you have. So it does get sort of critical love and care from management in a much more direct basis, on a day-to-day basis almost. And we do have our sort of managers at the operations. Even our COO spends a substantial amount of time at the operations. So we do I think have the ability to impact faster than some of the sort of bigger operations.
One of the first things that you say in your results commentary, Maarius, is you sort of focus on balance sheet strengthening, getting rid of the first uranium investment and the special dividend. Maybe you could enhance on those themes.
Yeah, absolutely. Lindsay, I mean, when we acquired the sort of Simmers assets, we acquired a number of liabilities with the asset at that stage. And during the last 12 months, we've strengthened our balance sheet substantially by disposing largely of our sort of equity investment in First Uranium to Anglo Gold, and then the subsequent, the subsequent payment of our Mine Waste Solution notes, which we used the bulk of that to pay out a special dividend to our shareholders. But between those two elements, we were able to address some of the overhang that we acquired when we acquired the Simmers assets, mostly the Aberdeen loan, which we've settled in full, and we've sort of sorted out our working capital requirements that went with the retrenchment of a number of workers at our Buffelsfontein operations in July of last year. So what we currently have is a largely balance sheet largely free of any debt, and some cash that we've got on the balance sheet.
Let's look at it operationally now, if we can, Maarius. As I said, your gold production more or less flat, just very, very slightly lower. Tell us about Buffels and Taulica and Consmerch. Any features, highlights and lowlights amongst those three?
Yeah, absolutely. I think Tau is producing according to plan. Certainly the sort of optimization process that we started late in October is starting to bear fruit. We had a very good production month in May. It was unfortunately impacted somewhat by a fatality at the mine that we suffered in June. But by and large, Tau performing really well. Particularly pleasing for us is the fact that we are controlling costs at Tau very well, and therefore we're not seeing a huge sort of inflationary pressure on our cost base. So Tau doing well. From the other operation perspective, we are somewhat concerned about our operational performance at Buffels, where our cost base has escalated significantly from that which we had in March, mostly driven by the winter tariff increases from an electricity perspective, but also as a result of a number of safety-related stoppages at Buffels, we were not able to reach our production targets. This has required that management review the sort of viability of Buffels on a long-term basis, but that process is still in its sort of early stages, and we hope to progress that quite substantially during this September quarter. Consmerch had a really pleasing quarter. Consmerch, a big turnaround for us. with antimony production increasing substantially from that we achieved in the sort of third quarter. It was buoyed by reasonably strong antimony prices, and the operations there had a really pleasing turnaround in terms of its sort of operating profit lines. And then we're also very pleased to announce, to have Blyffer as an asset for the first time for this quarter, with the Blyffer assets coming onto the balance sheet with effect from 1st of June. I think very pleasing was the fact that it contributed positively to operating profit in our first month of operation and ownership during June. Historically a very difficult month for gold operations given the increase in electricity costs due to the winter sort of tariffs. So all in all, very, very positive. I think it's also important to highlight again the very positive results from our pre-feasibility study, which we made available to the market for our Lesego Platinum project, a world-class project in all respects. In all the work we've done, it's on track to deliver a bankable feasibility study towards the end of April of 2013, and everything we're doing there confirms that this will be a real value proposition for our shareholders in time to come.
Maarius, it's good to see that Blyffer acquisition now being bedded down both operationally and also from a bean counting point of view. When you say platinum, of course, everyone starts seeing these flashing warning signs. I mean, obviously platinum is a long-term viable commodity for any company and also for South Africa as an economy. But do you get slightly worried about what you're seeing in the platinum industry?
Indeed, I think if we take a short-term view, the fundamentals are somewhat questionable right now. But I think the whole world is at idem that the long-term prospect for platinum remains as intact as it ever been. And given that our Lesego project will only start producing towards the end of sort of 2017, 2018, based on the current feasibility plan, that fits in very nicely with where the platinum market will be at that stage. And we've got very little doubt that we will have the ability to bring this project to fruition and value for our shareholders.
Well, let's hope so. Yeah, by that time, hopefully things will have stabilised lots sooner, one would hope. Talking about fitting in with your portfolio, what about a small player like yourself, a junior miner, if you like, fitting in with the bigger mining scene in South Africa? What is the reaction of shareholders to companies like yours? Are they starting to migrate from the bigger boys because of their bigger problems and starting to embrace your model and your prospects?
We certainly have a bit of a different sort of proposition to the market, and I think we've definitely positioned ourselves as not a junior mining company or not just another junior mining company, but focusing more on the sort of value creation for our shareholders across precious metals and across resources for that matter. So I think there is certainly a following that is developing in terms of alternative investors looking for opportunities in the resources sector that is not just commodity specific and that generates relatively good yields, both in terms of the ability to generate cash flow but also the ability to pay out dividends.
Maarius, we'll have to leave it there, but thanks very much for joining us on Power Lunch today. That's Maarius Saaiman, Joint CEO of Village Main Reef, whose quarterly numbers were released earlier today.